Jerome Powell made an announcement at today's Fed meeting that's bullish for Bitcoin. With the US economy between a rock and a hard place, we unpack the implications of higher for longer and interest rate cuts. Teaser, they're both bullish for Bitcoin. Plus, Ethereum's Foundation removes code from their GitHub after being investigated by the SEC for being themselves. Why is this problematic for ETH being approved for an ETF in the short term and for the future of the tokenized finance industry in general? And lastly, we share why the ability to harness computer power may be the difference between being the world's global superpower and not being one in the future. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. If you're a regular watcher and attender of the show, please like this video, share this video with someone who needs to hear this information, and do subscribe to the channel. It'll help us cut through the noise here on YouTube and teach more people about Bitcoin and why it's good for them moving forward. And as always, if you have questions about Bitcoin, send an email to daily@swanbitcoin.com. I personally respond to all of these emails and will get back to you as soon as I can to help you on your Bitcoin journey. And with that, let's get into today's episode. If you could sum up the impact of the Fed's rate decisions for Bitcoin in one simple image, this would be it. The price of Bitcoin is going up relative to the dollar, higher than Anthony Edwards dunking on this dude right here. The Fed decided that they would leave rates unchanged for the fifth straight meeting, between 5.25 and 5.5%. The Fed continues to expect 3 rate cuts in 2024, 2 in 2025, and maybe less in 2026. It also raised its core inflation target to 2.6%. That's a little higher than their normal target of 2%. We'll discuss a little bit about that later. The Fed continues its stance that inflation is eased but remains elevated. I wonder how they're going to try to tackle it. Let me break down a few things for us. Between December 2023 and early January 2024, the market was expecting 6 to 8 Fed rate cuts this year alone. But now, with Jerome Powell saying that they were going to do 3, and the market expecting 2 before the Fed meeting, they're realizing that the Fed pivot is potentially over. But why are people surprised about the Fed staying higher for longer? The US economy is between a rock and a hard place, and Jerome Powell is in a pretty tough spot. This is the route that they chose, but also a very difficult situation, which is option 1. The Fed continuing to stay higher for longer and try to inflate away the debt that the US economy has. Even with rates being at the highest level that they've been in 15 to 20 years, asset prices continue to remain elevated as real estate, stocks, gold, and Bitcoin are at all-time highs. Keeping rates higher could be problematic because it could trigger a sell-off in the assets that the economy needs to be propped up right now. People are holding on to a ton of paper gains that they have in their real estate and their stock portfolios, and boomers need this in order to retire. So can the Fed afford to have asset prices go down? Probably not. Even with rates at higher levels, inflation remains sticky and harder to deal with than the Fed imagined. But the problem is, if rates stay high, the US government needs to pay more money to finance its debts. And you know what that means. The fiscal bazooka is going to kick in. And what happens when the fiscal bazooka kicks in, or the government prints more money to expand the money base? Well, inflation becomes stickier, asset prices go higher, and the Fed has no more levers left to pull. From 2000 to 2023, the federal government has expanded its annual spending by 243%, even while inflation, or the CPI, has increased by 83%. More government printing will lead to more inflation. And you know what happens when more money comes into the system? Well, Bitcoin goes to the moon. Option number 2. Jerome Powell cuts rates and turns on the monetary bazooka. If this happens, demand and risk on assets sky higher than they already are, inflation spirals out of control, and what we're looking at in the future is not a 3 to 4% annual inflation target. What we'll be looking at is an inflation target in the double digits, like Venezuela or another developing economy around the world. The only way to tame runaway inflation is to cause a depression. Again, not a decision that Jerome Powell and the Fed would want to make. Luke Groman explains this well on Natalie Brunell's podcast.
I'm super bullish Bitcoin for the next 6 to 12 months, at least, tactically and strategically, because whether the Fed hikes or whether the Fed cuts doesn't matter. In my opinion, inflation and fiscal deficits are going higher. And the only way that doesn't happen is if the dollar is weakened. Then fiscal deficits actually will trend lower. So if my choices are higher rates, more inflation, lower rates, more inflation, or deficits down with a weaker dollar, more inflation, more debasement. I think it sets up really, really well for Bitcoin. And critically, the fundamentals are there. But then when you look at positioning, there's still a lot of skepticism around Bitcoin, and there's still 6 trillion plus sitting in money market funds. There's still a lot of concern. There's still a lot of belief that the Fed's, inflation's up, picking back up. The Fed's going to come in and smack inflation back down. No. They can try, great. And you could get a pullback on, hey, the Fed's going to go, oh my God, if we go from Fed's going to cut twice this year to Fed's going to hike twice this year, you're probably going to sell off in Bitcoin and industrial stocks, maybe even gold. Everything will go up with the dollar.
Yeah.
For like a week or two. Mm-hmm. And then there's going to be this recognition of like, oh God, okay, the treasury market's dysfunctioning. We can't have that. So then that's going to start the discussion. And ultimately, 6% rates are going to be more inflationary on a lag than 5.25%, because there's $35 trillion in debt, and it's rising as a percent of GDP now, and Fed rate hikes will make it rise faster as a percent of GDP. So I'm super bullish Bitcoin because I've got fundamentals. They hike, it's inflationary. They don't hike, it's inflationary. They cut, it's inflationary. And if they want to keep the wheels on the cart, they got to weaken the dollar or continue to weaken the dollar. All of which is good for Bitcoin. And consensus doesn't realize that yet, in my view. Consensus needs to go from they're still going to get the side of the tighten the boat to where I am, which is, doesn't matter. My choices are inflate, and inflate.
Option number 3. The U.S. relinquishes its global reserve currency status and overtly defaults on its currency, opting for an asset-backed currency instead of the U.S. dollar. I don't see this happening, but if it did, what asset would the U.S. reset into? Would it be gold? Probably not. The Eastern world holds much more gold than the United States right now. So if they were going to adopt a commodity-based currency that they have a leg up on anywhere else in the world, what commodity would that be? Bitcoin. Again, bullish for Bitcoin. In other news, while things continue to look bullish for Bitcoin, things aren't looking so bullish for ETH. Bitcoiners are not surprised to see that the SEC is investigating ETH as a security, because it is a security. For the first time ever, the Ethereum Foundation removed the warrant canary from its GitHub repository, indicating that they've been subpoenaed by a state authority. It's interesting that the SEC or a state authority would even subpoena them, because if it's an open, global, decentralized, trustless protocol, then what private information would they have to share? Well, I know one thing that they could share. Who owns what coins? How are they created? What were the rules and mechanisms by which certain people were granted tokens versus others? Check out this video right here and tell me if you don't think Ethereum meets the rules of the Howey test to classify it as a security.
So we are going to start the Ether pre-sale in a couple of weeks. So the Ether pre-sale will be an opportunity for anyone to purchase Ether. For Ether is the internal currency inside of the Ethereum system, sort of like the XRP and Ripple.
Now, is there a big window of opportunity for people to get in, or is there just like a one-day opportunity?
No, it's something we're thinking of. It might be 45 days, it might be 30, it might be 60 days.
Okay, so there's plenty of time.
Sort of an incremental thing, so the earlier you go in.
The earlier you get in, the better a price you get.
So now, like, let's say you're one of the founders of Ethereum and your colleague Charles, right? What's to prevent one of you guys to load up and get half the ethers for yourself, or do you have to buy in to those ethers also?
Yeah, well, okay, so we are going... Look, exactly how much Ether we're going to get, that's still undecided, but it will be very, very public, and it will be a rather small portion of the entire.
I mean, when you say small portion, are you talking about like 10% of the total, 5%? Because you know when
right, it'll be something like.
Or so you guys are still undecided.
Check this out. The Ethereum Foundation has hundreds of employees, a marketing budget, an R&D budget, a treasury, and a roadmap. What does this sound like to you? Oh yeah, a company. Well, how is this different to the rules and regulations that any other publicly listed company would have? Well, I'll give you a few. Have you seen an Ethereum S1, a 10K, a 10Q, any compliance to Sarbanes-Oxley? No, they were able to create a token out of thin air and monetize it without the same regulatory oversight as AAPL or MSTR as publicly traded companies. I think the bigger issue that the SEC is wrestling with is if that they grant the Ethereum an ETF, then won't they have to grant all of these other tokens who pre-mined and created a token out of thin air the same privileges? Regardless of what video you may be watching about Larry Fink talking about a tokenized financial system, proof of stake utterly has no value outside of what's created out of thin air. Tomer Strolight from Swan explains this well. Proof of stake has no tie to the outside world. Any number of proof of stake systems can be created, and there's no way to ascertain which one has more legitimacy. There's therefore no scarcity in proof of stake. However, only one proof of work system can have more work than the others. And that proof of work system is Bitcoin. It's not controlled by anyone, just backed by the world's largest energy and compute networks. With NVIDIA announcing super chips like Blackwell, it's clear the organizations, companies, and people who are able to effectively harness compute power and energy will be the leaders of the future. Listen to this clip from Sam Altman that will absolutely blow your mind on how precious a commodity compute power will be moving forward.
Look, I think compute is going to be the currency of the future. I think it will be maybe the most precious commodity in the world. And I think we should be investing heavily to make a lot more compute. Compute it's an unusual, I think it's going to be an unusual market. People think about the market for like chips for mobile phones or something like that. And you can say that, okay, there's 8 billion people in the world, maybe 7 billion of them have phones, maybe there are 6 billion, let's say. They upgrade every 2 years. So the market per year is 3 billion system on chip for smartphones. And if you make 30 billion, you will not sell 10 times as many phones because most people have one phone. But compute is different. Like intelligence is going to be more like energy or something like that, where the only thing that I think makes sense to talk about is at price X, the world will use this much compute, and at price Y, the world will use this much compute. Because if it's really cheap, I'll have it like reading my email all day, like giving me suggestions about what I maybe should think about or work on, and trying to cure cancer. And if it's really expensive, maybe I'll only use it, or will only use it to try to cure cancer. So I think the world is going to want a tremendous amount of compute. And there's a lot of parts of that that are hard. Energy is the hardest part. Building data centers is also hard. The supply chain is hard. And then, of course, fabricating enough chips is hard. But this seems to me where things are going. Like, we're going to want an amount of compute that's just hard to reason about right now.
And so the question is, if compute power is going to be the currency of the future, then wouldn't you want a money that can only be created by compute power, that harnesses compute power, and is backed by the most compute power? That's Bitcoin. In conclusion, regardless of whether rates are higher for longer or the Fed decides to finally cut rates, inflation is here to stay. Your purchasing power is being eroded by the need for the US government to continue printing to cover their fiscal debt responsibilities. And you also have this force in the need to harness computational power to remain relevant in a superpower in the future. Let me give you a solution to all three of these problems. With Bitcoin, you can outpace inflation, you can outpace fiat debasement from any government around the world, and you can harness the world's largest energy and computer networks to protect your wealth. If any of this is interesting to you, again, please send me an email at daily@swanbitcoin.com. And if you've been following along and enjoying this content, please like this video, share it with other people who need to hear this information, and do subscribe to the channel. And with that, we're signing off for the day. I'm Dante Cook with Swan.com. Happy stacking.